Hey everybody, this is Halstead and Andrew McMillan with REH CPAs. Today we want to talk about ISOs, incentive stock options. A lot of corporations use incentive stock options to either reward employees or incentivize them for high performance. I've got Andrew McMillan here with me today to talk about ISOs, what you should be aware of how they're taxed and what to kind of be careful with. Andrew, what can you tell us about incentive stock options?
Yeah, so they're a great tool that employers use to help employees really, like you said, kind of gain some ownership in the company and have some financial growth with the company if it does well. So basically really what it comes down to is ISOs are just an option to purchase stock at a set price, which is usually much lower than the fair market value of that stock. So if you're a company and they have stock that you can buy shares into, so you're going to be given the option to buy that stock at a set price, which is much lower than whatever the fair market value may be at the current time typically. So really when you're given the stock option, nothing happens when you're granted the stock option. Like there's usually a vesting time period there, so nothing happens at the time of being given that. So the only thing that really starts triggering some taxable events is when you actually exercise the stock. And what that means is you do something with it. You buy the stock or you exercise it. So once you exercise the stock, again, for ordinary income tax treatment, like nothing really happens until you actually sell the stock. That's when you would have to pay taxes on it.
And that's kind of where we run into the game with ISOs, where you can get really good beneficial tax treatment, right?
You can. ISOs are unique in the fact that you can convert them, you can obtain capital gain tax treatment, whereas there's other types of stock options like
they're immediate,
where it's automatically in your W-2 and it's ordinary income. So ISOs give you a chance to kind of get a little crafty with it if you want to and try to get it converted to a capital gain. So again, when you get a long-term capital gain. So when you get an ISO, when it's given to you, nothing happens. When you exercise it, you start to trigger some tax things that you need to start thinking about. So when you exercise it, what you're going to do is you're going to trigger an AMT tax element. So AMT tax stands for Alternative Minimum Tax, and it's really a way of getting people who are wealthy or higher income taxpayers. It's the way of the IRS's way of taking a second pass at your tax return. So, you figure out what your ordinary income tax is, cool. And then the IRS says, well, you're kind of in this higher income bracket. We're going to take a second pass at it and see if we can get any AMT tax.
And if you do certain things that trigger AMT, like exercise incentive stock options, which can trigger the AMT.
So when you exercise an incentive stock option, what it does is it triggers an AMT element. So when you exercise the option, you buy the stock, and then whatever the spread is, the bargain element they call it, between the fair market value and the exercise price, whatever that value is, that is going to be an adjustment for AMT. So that is going to increase your AMT income when the IRS wants to take a second pass at your tax return. So if you exercise the stock and you don't sell it and you hold it for a year and a day, to get long-term capital gain treatment, you're probably going to cross over a tax year. So you have to be mindful of that tax year that you exercised. You may not have the money yet because you haven't sold the stock, you haven't cashed out of that stock because you're trying to get long-term capital gain treatment, but you've triggered an AMT tax when you exercised it. So you're going to owe quite a bit of money on that AMT tax, most likely on the amount of that bargain element piece. So the only way to avoid the AMT tax when you exercise the option is to sell it before the end of the year, before the end of the calendar year. So if you exercise the option on April 1st, then you need to sell it by December 31st to not have to pay any AMT.
Right.
But the kicker is it's all ordinary income.
And just to be clear, the big advantage of these is to be able to hold it for long-term capital gain treatment.
Right.
Hold it for greater than a year.
Right.
To get that long-term capital gain rate, because your higher income folks, their top tax rate could be up around 37%, whereas the long-term capital gain rate is going to be around 20%. So there's a big incentive there to try to hold it. Huge difference, especially on some of these ISOs. It's usually a lot of money. And where we see people get in trouble, though, the rub is the AMT, because you trigger the AMT in that tax year in which you exercise, and then they want to hold it for a year and a day so that way they get that long-term capital gain treatment. It crosses a tax year, and where we see people get into trouble is that the stock was at a certain value whenever they exercised, so they created this big tax liability. They go to wait a year and the stock plummets in value. So whenever they sell that stock, it is not worth nearly what it was whenever they exercised, so they don't have the money to pay that huge tax liability. We've seen cases where the stock has gone to zero, but they say they have no money to pay the tax, but they still owe the tax, and that's a problem.
Right, so it can definitely be a dangerous game, you know, certainly depending on the amount of money and what you think the stock's going to do. Most of the time it's stock in a company that you work at, so you feel good about the culture and what you're doing. You may know some mood, you know, you feel good about where the stock is and you feel like it's going to go up, but if you want to avoid the AMT element piece altogether, you're going to need to exercise that option and sell it within the same year, before the end of the year, before 12/31 of that current year, to make it'd be a short-term capital gain taxed at ordinary tax rates.
Right.
So.
Well, really good information, Andrew. You know, if you are somebody out there and you're dealing with incentive stock options and you have questions about timing and when you should sell, things like that, feel free to give us a call and we'll help you out. I appreciate it. Thanks.